Stop scrolling. If you've ever asked yourself, why do I keep losing money in crypto even when I study? This video is for you. Subscribe now if you want to understand crypto trading the way professionals do, not the way Twitter tells you. Now, before we go any further, one important thing. This content is for informational purposes only and does not constitute financial or legal advice. Alright, let's get real. Most people think crypto trading is about indicators, strategies, or finding the perfect coin. That's the lie. The truth is simple and uncomfortable. Crypto trading is 80% psychology and only 20% technique. And today, I'm going to show you the psychological traps that silently drain your wallet without you even noticing. Let's start with the first one. Most traders don't trade the market. They trade their emotions. Fear, greed, impatience, revenge. These are not feelings. They are hidden strategies you never chose, but still follow every day. Here's the first mental mistake. You confuse movement with opportunity. When price moves fast, your brain thinks, I must act now. But the market doesn't reward speed. It rewards timing and discipline. Professional traders wait. Retail traders chase. And the market always punishes the chasers. Now let's talk about something nobody wants to admit. You don't want consistency. You want excitement. That's why leverage feels attractive. That's why meme coins feel tempting. That's why boredom makes you enter bad trades. Crypto becomes entertainment instead of a system. And the market loves emotional gamblers. Here's a brutal truth. If your heart rate increases when you open a trade, your position size is already wrong. Trading should feel boring. If it feels exciting, you're doing it wrong. Now let's hit another psychological trap. You believe being right matters more than making money. This one destroys accounts quietly. You hold losing trades because you want to prove you were right. You refuse to exit because it will come back. The market doesn't care about your ego. Every professional trader knows this. Losses are business expenses. Refusing to take a loss is like refusing to pay rent. Eventually, you're kicked out. Quick reality check. And yes, this one hurts a little. You don't lose money because you're unlucky. You lose money because you repeat the same behaviors. Same entry mistakes, same emotional exits, same overconfidence after one win. Different coin, same story. Light humor moment. Because we all need it. Crypto traders say this time is different. More often than people say, I'll start the diet on Monday. Now let's talk about information overload. You watch too many videos. You follow too many accounts. You listen to too many opinions. And suddenly, you don't have a strategy. You have noise. When everyone screams buy, professionals are already selling. When everyone panics, professionals are already planning entries. Clarity beats complexity every single time. If this is making sense so far, hit the like button. It tells me to keep making content like this. Now here's a dangerous mindset almost nobody talks about. You treat profits as skill and losses as bad luck. But both come from the same source, your process. One lucky trade doesn't make you good. One bad trade doesn't make you bad. Your system defines you, not single results. This is where most traders fail. They change strategy after every loss. They jump systems after every drawdown. Professionals don't change systems. They refine execution. Another psychological killer. You don't respect probabilities. Even a great strategy loses sometimes. And when it does, weak traders panic. Crypto is not about winning every trade. It's about surviving long enough to let probability work in your favor. If you quit after losses, math never gets a chance to help you. Let me say this clearly. The market doesn't reward intelligence. It rewards discipline. You can be smart and still lose, but you cannot be undisciplined and win long term. And this brings us to the most important idea of this entire video. Your biggest enemy in crypto is not the market. It's the version of you that wants fast results. If you want to build a trader mindset instead of chasing hype, subscribe and comment discipline below. I read every comment. Now let's go deeper, because this is where most traders completely collapse. You don't lose money in crypto because you lack information. You lose money because you react instead of execute. Reaction is emotional. Execution is planned. And here's the uncomfortable truth. Most traders don't actually follow a plan. They pretend they do. They enter with rules, but exit with emotions. They say, I'll cut the loss, then watch it bleed. They say, I'll take profit, then get greedy. That gap between intention and action is where money disappears. Let's talk about confidence. Fake confidence. After a winning streak, traders feel invincible. They increase size. They reduce discipline. They stop respecting risk. The market loves this moment. Because confidence without structure turns into arrogance. And arrogance is expensive. Crypto doesn't punish ignorance first. It punishes overconfidence. Here's something most people never hear. You should size your trades so small that losing feels boring. If losing hurts emotionally, your risk is already wrong. Professional traders protect their psychology first, profit second. Because once your mind breaks, your strategy is useless. Quick pause for reality. If you feel the need to make back losses, you're no longer trading, you're chasing emotional closure. And the market is ruthless with emotional traders. Now let's talk about patience. Or better, the lack of it. Most traders enter too early. They see a setup forming and jump in before confirmation. Why? Because waiting feels painful. Patience feels like missing out. But impatience feels active. The market rewards waiting, not activity. Doing nothing is a position, and often the most profitable one. If this video is helping you think differently, make sure you're subscribed. This channel is about long-term skill, not quick hype. Now here's another silent killer. You compare yourself to other traders. You see screenshots. You see big wins. You see fake lifestyles. And suddenly, your steady progress feels too slow. So you force trades. You increase leverage. You abandon your process. Comparison destroys consistency. You don't need someone else's results. You need your own system to work. Another mistake almost nobody notices. You trade when you're tired, stressed, or distracted. Mental state matters more than indicators. A bad mindset turns a good setup into a bad trade. A calm mindset turns average setups into acceptable outcomes. Professional traders know when not to trade. Retail traders trade to feel productive. Let me be clear. If you trade to escape boredom, frustration, or fear, you will lose. The market doesn't care why you need action. Now let's talk about losses again, because this is important. Losses are feedback, not punishment. Every loss tells you something about timing, execution, risk, or discipline, but only if you analyze it calmly. Most traders don't review trades, they just move on emotionally. That's like repeating the same exam without checking answers. Growth requires reflection, not revenge trading. Light humor moment, because yes, it's true. Most traders analyze their wins more than their losses. That's like learning to drive by celebrating green lights and ignoring crashes. Now the final and most important concept. Consistency beats intensity. You don't need big wins. You need repeatable behavior. Small edges, executed well, over time. That's how money is made. Crypto is not a sprint. It's not even a marathon. It's a survival game. The traders who survive long enough eventually win. The impatient ones fund the market. If you want to build discipline instead of donating money to the market, subscribe now and comment, process. That's how traders actually win.